Fiscal advisors in their presentation they just made to you acknowledged that they did not determine the $135 million sale based on a construction program. They indicated that staff was working on that program. The last facilities master plan that was adopted by the district was in 2007. I received a letter from Dr. Harder indicating that that plan was being updated by consultants and would be available July 25th, 2014. I have not seen that plan as yet. I think it's premature to sell bonds when we do not have a construction plan that sale is based on. Further, in the audit report that we're going to review later in today's meeting, the auditors made a number of comments, concerns about the cash flow for the bond program. In addition, we know in the past that the district has had violations of the federal arbitration clause by having too much cash on hand. So my thought is, and particularly in regards to your item F1, which is, again is later on in your agenda, in terms of the end game planning, I would suggest that this matter be referred to your audit subcommittee and considered as you discuss the end planning in your proposed resolution F1.
Any other public comments?
I apologize, I was out last month and I didn't know you were making part of.
Okay.
I have two quick questions. One is, when we had the civil grand jury report, they suggested not to use the cap bond. In the reply from the district, they said they would not use cap bonds, and they would try to use callable or callable bonds. Would these fall into that category?
I guess just for clarification's sake, should I be responding to public comment? Yes, these would be callable bonds. That's part of the Assembly Bill 182 parameters. All bonds, whether they be current interest bonds or capital appreciation bonds, will have a callability provision no further than 10 years out.
Very good. And the second question is, the other bonds that we've had about a maturity rate of about 20 years. These have a 40-year maturity rate. Why so long?
There's options to be considered on what's been structured and what will be structured. Recognizing, I think Measure J is a great example of volatility in the economy, which provides for movements in assessed valuation growth. So what we're trying to accomplish by utilizing the 40-year term is to minimize the cost of borrowing today and provide for flexibility for the next multiple series of bond sales to continue forward with the construction program and make sure that money's available in that sense.
Okay, now we'll have comments and questions from our committee. Charles?
No questions. No questions.
Charles Town. Question about, through your presentation, you heard first before, so to me what's important is why are we hearing it at this point? So that's the reason why I was wondering. I mean, what is there to be decided anymore? Basically, you're going to the board approve the resolution authorizing sale, and the board approval of the November 12th action means that you're going to sell these bonds no matter what. The only thing the board is discussing right now is, the only thing that they would act on is the way that you would frame it on February 11th, the updated preliminary official statement. So you're discussing something that's essentially a federal company. There's no, like, suppose that we decided to make a recommendation to do something different. I'm not saying we will, but it doesn't matter because the dying can't, or is that not?
That's not true. November 12th has not come and gone yet, and there has been no action to approve those documents. That will take place on November 12th. I think in working with district staff, the purpose of this presentation for informational purposes to share what planning efforts are leading to what's going to the board on November 12th.
So one thing that can still be decided is the question of what kind of, whether it's a negotiated sale or the other kind of sale, right? The competitive sale. So that's still something that is.
The documents that will be going to the board on November 12th represent a negotiated sale structure. If there was any recommendation from this board to do anything different, that would be communicated to staff.
Start from this end, and we'll work our way around. Here?
I just have some questions about our credit rating. What's our current credit rating?
The district goes to all three rating agencies, Standard & Poor's, Moody's, and Fitch. Fitch currently rates the district A with a stable outlook. S&P has a rating of A+, and Moody's has a rating of A1.
Madam Chair, we actually have a correction over here.
Jeff, this is A+.
Thank you, Martin, for clarifying that.
Standard & Poor's A+.
Thank you, Mr. Coyne.
A+,
So-
Fitch, S&P is A+.
And A1 for Moody's.
Can you give us some context about credit agencies? What are they relative to other school districts in our area or to other municipalities?
I think there's one more correction. It's A for Moody's. Yeah, I can put some context as it relates to the ratings. They use an approach which looks at the global scale of all issuers, not just in California, not just school districts, but all issuers throughout who they rate across the U.S. And they apply a methodology that evaluates characteristics of tax base, the exposure to volatility, to economic cycles. They also look at the financial management of the issuer. Among their primary factors, they also look at outstanding indebtedness. They look at plan development and how that will influence the tax base. Those are some key characteristics on each of the rating agencies' websites. They can give a bit more context as it relates to their unique rating criteria.
Have the credit agencies given any indication that they are going to downgrade our credit rating?
There hasn't been any indication that there's going to be a downgrade of ratings. Each time we look to sell bonds, we bring the most current relevant information that's available at the time and allow for them to evaluate based on that information. In some cases, rating agencies will do a surveillance of ratings. We're not aware of either any of the three rating agencies doing a surveillance at this time.
Do you have any questions? Peter, anyone there?
A follow-up to Peter's question, so where do those A plus fall on the spectrum of ratings?
The highest rating is AAA. That's usually held by very, very few school districts. Usually they're all basic A. And other very large issuers. And it covers a large spectrum down to what's considered maintaining still an investment grade, which is BBB or higher. And then below that, I mean, it goes down below BBB to BB, single. Each of the three rating agencies have their own unique terminology. Moody's uses something a bit different than Standard & Poor's and Fitch do, for whatever the reasons may be. But comparatively, they have the same criteria. And so for each letter category, there's a plus, minus, or straightforward rating in the middle. And then the letter categories, again, range from AAA all the way down